in this current environment, Samara, how are you looking to keep finding the right companies to back despite the economic headwinds?
These companies have built in many different environments. A lot of these founders have never been able to get venture capital funding. They've always had to get revenue from their customers very early on. They haven't been in the traditional markets in Silicon Valley. They don't come from family wealth. They don't typically come from Ivy League schools. And so we've seen a lot of them have to just get revenue from their customers, get revenue in other sources. And so for us, I do believe this is their time to shine. And this is a great opportunity to really highlight the startups that are going to succeed in all markets, but particularly in this market.
It feels like, and correct me if I'm wrong, given that you've been out there looking at these sorts of smaller pre-seed companies since 2019, is it busier in that space now, given that some of the bigger funds are perhaps not wanting to write such enormous checks in this current space?
Yes, it's always busy. I think in this market it's been particularly busy just because there has been a slowdown in the growth market, investors and IPOs. A lot of early stage companies are raising more capital pre-Series A. And so we've seen a lot more bridge rounds and pre-Series A companies come to us. So it is definitely busier, but I will say it's a correction that needed to happen. The last 2 years were an anomaly. I've been doing this for 8 years now, and so it's nice to get back to real fundamentals, real revenue. And I would say it's busier than ever.
Samara, what are the main factors when you're sitting in front of a founder thinking about investing at the pre-seed stage about how you write a check?
Yeah, and we're many times pre-product, pre-revenue, pre-name. And so early on, a lot of it is the people side. And we look for founders that understand these markets in a unique way. So we're not exclusive, we're intentional about where we invest. And these founders that find these unique opportunities in markets that many see niche, but are growing and often overlooked. That where the consumer demographic has changed, where traditional customers like banks, because we target a lot of fintech companies, they don't typically know or understand how these certain communities work. And so these founders come from these communities. They understand them better than anybody else. And so we're looking for this unique factor in these founders that understand certain markets where others haven't even lived or choose to understand. And then very early on, we look to see what have they done with very little raise, because we often are the first institutional check-in. So we look for a path to sales, a path to revenue, good unit economics, a plan to get there. And that is now something that a lot of people are looking at. But the last 2 years, that wasn't something that, a lot of people kind of looked at. It was a lot more momentum driven.
Hey, Samara, what's going on out in Chicago, where you are in the pre-seed environment? A lot of deals happening?
Yes. So Chicago is a great market to be in. It's in the Midwest. There's a lot more newer funds coming to market. When I started the firm, there was very little angel money or pre-seed, and we are growing. There's a lot more funds coming to market. As a matter of fact, my largest investor, the Illinois Growth and Innovation Fund, was the reason why we're here. They're investing in a lot of new VC funds like ours that come from not traditional kind of VC backgrounds typically, or are looking at new markets in a different way. And they're able to be the first check-in and double down on investors like us that can see a different space and can drive alpha.
You, of course, had 6 years at Goldman. You went to Math Venture Partners. You've been tried and tested in the venture space before forming Chingona, and you've written a lot of checks. You're also, of course, trying to build that diversification by allocating to Latinx founders in particular that maybe have gone overlooked. Are they getting more overlooked in this environment as people sort of revert to norm to tried and tested founders?
Yeah, it's a tough market for all founders. But yes, I would say particularly women and minorities, it's been hard. It's never been easy, but it's particularly harder now. And the way we think about it is, we're looking at markets for returns, first and foremost. I'm Latina. We represent less than 1% of all venture capital partners in the United States. I'm an immigrant to this country, grew up in a low-income environment, and that, I believe, is our superpower. It's our unique edge to identify these opportunities and businesses that cater to the 99% of the population. right? Where it's great to get food faster as part of your business, but there's so many
Yes.
opportunities for women's health, for certain communities that are creating wealth in a very different way. And people still think we're niche, the numbers that we have, 1 out of every 4 kids being born today is Latino. We are getting higher education better than their previous generations. We have one of the highest GDPs to be able to spend money, and people don't know how to target us. And so for us, we see that as first and foremost an opportunity in the market to really drive returns, but also for us to uniquely understand these businesses where we don't have to ask if our spouse uses the product or do research on the market. We can go in there and we oftentimes get commented by founders that like, wow, this is an all-women team. That's great. That's fantastic. And again, we're not exclusive. We're intentional, and so we can bring a lot of different perspectives to the cap table, to the boardroom, and be able to provide our perspective, our lived experiences in these markets to be able to drive returns.